All right. Hold on, people. Just give me a moment here. Okay, cool. So, I'm very excited today. I want to welcome everyone because I am back on TradingView. Okay, so I want to welcome everyone. Let's just get this thing started. My name is Mark P. Markets, Mark Principato. If you're just joining the stream now, this is for educational purposes only. For investment advice, please consult a licensed investment advisor. All right, people. So let's get this thing started. All right, hold on. I'm using some new technology here. So just give me a second. Hold on a second here. And let me get this thing working. All right. Just give me a second. All right. Oh, I got to turn this thing off. New technology. All right. So you can see that you should be able to see my Bitcoin chart right now. And let me just go check the chat, because it's going to be busy today. All right, people. So again, welcome. I'm multi-streaming, by the way. It's a great thing. Technology is an amazing thing. I'm stuck back in the year 2000 as far as technology. So it took me about 6 months to figure this out. All right. So let's get this thing started. Now you can see me, and you can see when I do my Seinfeld impressions. All right, cool. So it's good to see everyone. I'm glad to be back on TradingView. Now, as you all know, I have to follow house rules. So you guys know what that means, right? I said that about 1,000,000 times during my previous streams. So first thing I want to do here, and by the way, TradingView people, if you can see me, definitely chime into the chat and all that, because again, it's been a while since I've been here. Today is Monday. And before we get into the Bitcoin analysis, I just want to explain for anyone new that's watching. First, I'm going to analyze Bitcoin, all right, for whatever, 5 or 10 minutes, probably 10 minutes, because I talk too much. And then we're going to take a look at your questions, okay? So if you have a question about a chart, a stock, or an altcoin, please share it in the channel now. And please, one question per person. I'm probably going to have a lot of questions, okay? So one question per person. I want to try to get to as many questions as I can. Also, if you want to share what city or what country you're from, that's always a fun fact. I'm streaming from the greater New York City area. So that's why I talk the way I do and the way I look the way I do. I'm just joking. All right, so today is Monday, and you know that I have to go over the economic calendar first. Now, TradingView, of course, has its own economic calendar, which you can use. I like to use a separate one, which is off screen right now. I'm just going to go over the main things for the week. Again, the whole point of the economic calendar is just to be aware of any important economic events that can cause a range expansion, right? And it helps us mitigate risk. That's the whole idea. Okay, so let's go over that very quickly. Now, today is Monday. Here, hold on, let me adjust my microphone here real quick. Hold on a second. Maybe you guys can hear me a little bit better now. All right, cool. So first, let's take a look what we got here. Today is Monday, 8 p.m. We have Australia, Governor Lowe's speech. All right, that's usually not a major deal. By the way, I think that the New Zealand dollar trade that I had sent out a little while back got stopped out ridiculously. Anyway, okay, what else we have here? The 23rd, which is Wednesday, we have for the pound consumer price index. Again, that's not a big deal. Then we have Fed Chairman Powell speech. Okay, that's on the 23rd. I don't know what time he speaks. You're going to have to look that up because it's not on my calendar here. But something like that is very important. Why? Because the guy can say something that the market's not expecting. All right, we had the FOMC meeting the week before, and the rate hike was expected, okay? But it was the press conference afterwards where he may say something or hint something about the future, and then the market liked what he had to say. I don't sit there and go through all of his words like everyone else. I let the market figure it out, and the market said, hey, we like it, okay? Because he was very dovish, and he wasn't very, he wasn't giving any specific information about aggressive rate hikes, right? Which is what the market wanted to hear. You can't apply logic to these situations. It's all about whatever the market feels at the moment, okay? It's not our job to try to trade that. It's our job to let the market figure it out, and then we adjust from there and manage risk, okay? So anyway, the point is the guy is speaking again this week on Wednesday. The markets may be quiet going into his speech, so just something to keep an eye on. Let the guy speak, let the market figure it out. All right, Bitcoin basically is part of the S&P right now. They should have there should be a separate S&P sector, just Bitcoin, because it's following the S&P. All right, as much as people like it or not. All right, also on the 24th, oh no, I'm sorry, the 23rd, Bank of Japan monetary policy meeting minutes. Okay, no one cares about that. The 24th, we have Germany market manufacturing PMI. Again, those numbers aren't going to matter really. Also on the 24th, Swiss National Bank interest rate decision. Again, if you're in the franc or maybe a franc cross, that can affect something like that. But usually these rate decisions from other countries don't have a major effect. It's what happens when you're not the world reserve currency. All right. Also on the 24th, let's see, Germany market PMI. We have European market PMI composite. Okay, those aren't anything to worry about. Those are not global market movers. The 24th, we also have Great Britain market services PMI. No one cares. On the 24th, US, we have durable goods orders and non-defense capital goods orders. Okay, so that whole thing, X aircraft. Okay, again, that's usually not a major market mover. Any of these minor, I'm going to call these minor reports because it's not an FOMC meeting, it's not NFP. Okay, those are the main reports that move markets. Everything else like CPI and all these other ones, GDP or whatever, if there's a major surprise that the market wasn't expecting, then you may see a move. But most of the time you get nothing, okay, out of those markets, nothing at all. So just something to be aware of. Okay, anyway, that's the economic calendar. Again, TradingView has its own calendar. I suggest you use it. All right, now let's get into Bitcoin, shall we? And again, I'm going to analyze, we're going to evaluate Bitcoin here for the next few minutes, and then I'm going to get to your questions. So please put your questions in the channel now. Also, if you have a stock or an altcoin, put the symbol in, and please make sure to put USD or USDT after the altcoin symbol so I get the symbol correctly. All right, I'm going to just say hi to a few people. All right, we have Ben. Hey, Ben, good to see you. Schwartz, my international man of mystery. He's in Israel because, you know, he's international. He's everywhere. Very cool to see you, Schwartz. We got Dan, good to see you. Bill, all right, Mr. Plow, Kai, got all my people here, all my regulars. Welcome, people. All right, let's talk about Bitcoin here. And okay, and I got a guy, Jude, in TradingView. Hey, good to see you, Jude. All right, the way this thing's working here, TradingView, of course, doesn't cooperate with what I'm looking at, so I have to look at a separate window. All right, anyway, no problem. It's still cool that I'm back on there. So let's take a look here at Bitcoin. You should all see the chart, and you should still be able to see me on here. Now, in my TradingView article that I wrote yesterday, I talked about this range. Okay, here, let me pull this out here. Talked about this range. This is really all you should be concerned about. You notice it's basically it's inside of a rectangle, right? It's a consolidation. People keep getting excited when, you know, the market does one of these things. Oh, the market's rallying, blah, 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 blah. It means nothing, okay? As long as we stay below this range resistance, the market's going nowhere. Get that in your mind. The market is going nowhere. I can't make that any simpler. Now, so what does that mean? Well, that means that we're probably going to gyrate. Now, when we look at the bigger picture and we want to look at get some perspective here, well, where can the price be, you know, at some point in the future? What does the price structure say? What does it favor? Well, as I talked about, and I've repeated this a number of times in my TradingView analysis, this area right here is a lower high. That's our short-term trend. It's a consolidation, but this area, 45K, has established itself as a lower high. What follows lower highs? Lower lows, okay? Now, when you mix in the interest rate situation and the rising rate environment, which is just beginning, Bitcoin does not have much potential in the future right now, unless there's some surprise catalyst, like something like ridiculous, like Elon Musk comes out and says, hey, we're not going to accept dollars anymore for my cars. I'm going to accept Bitcoin only. If he says something like that, sure, Bitcoin's going to rally and it's going to have a sustained rally behind it because that's going to be something unexpected. But as long as we are in a rising rate environment and Bitcoin is basically acts like a growth stock, right? And it follows the S&P, well, the S&P is going to have a hard time in a rising rate environment. A lot of stocks that have to borrow a lot of money, they're going to their revenues are going to be affected and all that stuff. Their margins are going to shrink. That's just what happens. That's why the Fed raises rates. They're trying to control inflation. So Bitcoin, since it's sort of a product of that, is probably going to feel the pain as well. I mean, Bitcoin, you can think of it as something like gold, right? Gold only rallied recently because of the geopolitical tension. It was temporary. There was nothing really behind that rally. So anyone that bought the top of that, you should know better. All right. Now, with the dollar looking the way it's looking, Bitcoin's not going anywhere. The dollar needs to be weak overall, and the dollar is nothing but strong. It has some red days here and there, but the dollar's strong. There's no question. The trend is still bullish, and it's going to take some time for that to change, not a couple of days, right? Also, you have to keep an eye on the bond market. I'm not going to take a look at those charts right now because I want to focus on Bitcoin, but those are your key markets: the 10-year note, the S&P, and the dollar. That's really what, if you want to get clues as far as what's likely to occur in this environment, or if we're in a supportive environment, not, that's where you're going to get your answers from, not some fake guru expert claiming to use some magical strategy. It's magic. And, saying, I know the future because of my magical oscillator. It's all nonsense. All of that stuff is about 99% nonsense. This game is a random game. If you can't put that through your head, you have no business being in this game because it's random. No one knows anything unless you're an insider. So as far as retail traders go, the only chance we have is to capitalize on sentiment situations, right? When there's an imbalance in sentiment, that's what price action can help us learn and then mitigate risk or manage risk from. Because we have to look at this always from a defensive perspective. Not, I'm going to make money. I'm going to make money. You're not going to make money. Okay. We have to look at protecting capital and looking at areas where risk is the least and probability is most in our favor. It's very hard to do because there's no precise way to do this. Now, so back to Bitcoin. I'm anticipating a lower low. Okay, basically, I'm anticipating the lower low unless the structure changes. But right now, this structure favors a break of 35K. When will that occur? I have no idea. It's when the market decides to break. So, it could be in a week, it could be in a month, if the S&P continues to be weak or whatever, because we had that magical rally that everyone's making a big deal about, but it rallied right to a resistance level in a short-term bearish trend. So not a good place to be buying and not a good time to be buying stocks, especially for investing purposes. Not a good time unless it's a value stock. Now, so I'm anticipating the break of Bitcoin. So if it touches 35K again, people, most of you know I don't short Bitcoin. I'm not going to start now, but this was a sell signal. I talked about it in my analysis on TradingView. I don't short something like that. If this was the S&P, I would be more interested in something shorting something like that. But this is Bitcoin, right? So I don't do that. Now the thing is, if you're shorting something like this, you're looking for the midpoint, because if you look for more than that, you're asking for trouble, because this thing can go anywhere. This thing can still touch the 45K resistance. It can still touch it and fail from there. So you're facing that type of risk. This is a midpoint. It's a bad place to put on any type of position. So as far as the coming week, what I'd like to see for a possible trade idea is a test of 35K followed by some type of confirmation. Okay, so basically I'm looking at the level, right? Which I always emphasize to people. This game really begins at the level. And then at the level, I want to see confirmation. I'm not going to step in front of that because especially since the structure favors a break of that, I'm definitely not taking that risk that thing breaks and I'm going to get stuck in it, right? So I want to see confirmation at that level, and then that could be an aggressive swing trade long. Why aggressive if it's at a support and it's a long? Because the structure is not favorable. So a swing trade long off of such a level, you have to adjust your expectations. I would not have price targets at 45K off of such a trade. They would be much more conservative. In this environment, in fact, I'm very happy if I can get away with 1-to-1 reward risk, or maybe slightly more than that in this environment. You really have to take what you can and run, because things are changing very quickly. And in these consolidation environments, they're very hard. Okay. So you have to be very selective and wait for very particular levels. People that are going to get really messed up in this are people that look at very small time frames. They're going to be clueless because it's going to change so much. It's going to be so random. They're going to have a very hard time. All right, so that's my Bitcoin analysis. How am I doing here so far? Okay, not too bad. Let me now get to your questions. So let me just look over here at TradingView. Okay, so we got Jude, we got Eric Hay from San Francisco. Cool. We got St. Paul. What do you think of the yield curve? All right, cool. Good questions. We got Michigan. Cool. All right. So let's get into your questions here. All right, I'm going to scroll back on the chart. I see lots of stuff, so I appreciate your questions. I'm going to do everything that I can to try to get to them all. One symbol per person, please. All right, so let's get started with the questioning here. So first thing I see, Ben from Canada. What do you think about AA? All right, so let's take a look. AA. Let me put that up here. And aluminum is breaking highs. Right. Well, so that's part of the geopolitical situation. That's why all of these things have been going nuts recently. All right. A lot of these things have been going nuts. This is a bullish trend on the bigger picture. I mean, look at that. Talk about inflation, right? Higher lows, higher highs. We have a higher low here at, what is this, 69.96 right there. And look where we are. So based on this structure, this is a chart where a breakout is reasonable to anticipate. Okay, I would not take that type of breakout. That's not my style. But based on the structure, a higher high is likely. You have a higher low, so a higher high is likely. How far can this thing go? Do we have any other price history on this thing? Let's look back a bit here. Or are these like all-time highs for aluminum or for this stock? No, it's been higher. Okay, it's been higher. You have some going back to 09. Okay, look how far back this goes. Okay, what was that? 07. Man, even back in 07, I was still bald. But anyway, yeah, look at this. So you have a resistance area. This would be aggressive long if you go for that breakout. That would certainly be an aggressive long, because this thing can easily fail. But I certainly wouldn't be looking for shorts, not on this structure. All right. Now, if it gives you a clear sell signal and you're aggressive, for the double top, again, that's on you. You're fighting the structure, right? So really, there are two ways to play something like this as far as swing trades go, and it requires a lot of patience. So it can be very frustrating. But the first is you wait for the breakout and then let it retest the old resistance, right? It pops. I can't even get a box here. All right, it breaks out and then retests, something like that, where it goes up higher and pulls back. That's one possibility. Or basically, you wait to see if this thing fails and pulls back into somewhere around this area here, right? And you're looking to buy like the range low if this thing tries to consolidate. Now, again, when you're dealing with something like this, they're benefiting from all this geopolitical stuff, blah, 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 whatever. It really pays to take a look at the dollar index. Look at the dollar index. This is going to affect everything, metals, everything, food, all that other stuff. So this is not bearish. Okay. People say, what about the double top? Blah, blah, blah. Okay. Well, higher low. So higher low, at least a higher high, plus the interest rate environment supports a stronger dollar. So as long as dollar continues in this trend, things like gold and everything, they may have these temporary moves, but you have to understand that they're mostly temporary. Now that AA chart, that's a pretty persistent trend. So you want to try something like that. That one would be a good choice for an options combination. I'm not going to get into details on that, but the options at least allow you to really control your risk really well. But anyway, nice chart. Okay, so that's how I would look at something like that. And I would certainly keep that one on the radar, Ben, but certainly on the long side. Schwartz, okay. XRP, what do you think of all the, all right, so I don't pay any attention to any news. So whatever they're saying about something like XRP, if there's any hype, especially altcoins, I especially have a hard time with altcoins because they're worthless, okay? Most of them. And there's too many of them. And they were just a product of a very easy monetary policy environment. So most of these are going nowhere. I don't know what the fuss is, but this chart, if that's all it's got, it's not very impressive, okay? So let's look at some levels here. First of all, you have your support is going to be around this area here. What price is that? That's 66 cents, around there, 66 half. Now, you have this resistance up in here. So similar to Bitcoin, can we argue that there's a higher low over here? Yeah, you can argue. But the thing is, technical analysis is going to be hard with these things. You know why? The environment is not supportive. These are like growth stocks. And in a speculative environment like we saw in the previous 2 years, these things have a better chance because there's all this money floating around and it likes to go into speculative things. We're going into the opposite type of environment. We're going into a, what was it? A tightening, what was it? Instead of an easing policy, I forget there was a word for it, a tightening cycle, I forget. Quantitative tightening, that was it. Right, Powell, and instead of quantitative easing, we're going into quantitative tightening. These things are probably not going to do well. So that, for me, that crosses off all altcoins. I have no interest in altcoins in this environment. I have no interest in growth stocks. Anything in the Russell 2000, forget it. Throw them in the garbage, all right? Value stock. This is going to be a value stock environment. So what that means is, if this thing gets up into that area right there, if you're long, you want to get out, at least take some profits, take something off the table at these resistance levels. But certainly, this is not a good time to be chasing these. All right. There may be some hype here and there that gets them going, like, you know, Rune before it ruins everyone. Get it? I'm funny. But you're going to have some isolated situations like that. But most of these are not going to be going anywhere. Follow Bitcoin, okay? If Bitcoin can't go anywhere, most likely something like this will not. So I don't pay attention to any news. Look at the levels, and that we're coming near a resistance. Now, if you want to get long something like this, just be patient. It may take 3 months. Let it test the support at least, okay? At least look for a better location. This is not a good location. People always get interested and excited when something looks like that. Okay, oh, it's going higher. But that's actually when it becomes more vulnerable. You want to be interested when the fake gurus are not interested. You know, fake gurus, news outlets, they're usually not interested around there because, hey, you know, XRP, it's not making any money. Let's ignore XRP. Let's find the next one that's moving. But that's when you should be paying attention. You need to think opposite of the herd. Okay, you need to be ahead of them, not behind them, not reacting to something like this. So I certainly don't like it. And even though, yeah, it's got some higher low, blah, 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 it has a long way to go to prove itself. Plus, it's a follower. It's not a leader. Okay, it's not Bitcoin. So that's XRP. Thank you for asking. All right, let me jump over to the other chat because I see the other chat is not part of my main chat here. Gonna have to talk to TradingView about that. Okay, Dash. Oh no, wait, Aussie dollar. I got an Aussie dollar guy here. Okay, let's take a look. So from Jude. Now, Aussie dollar, I don't get too many. I put the wrong pair in there. Believe that? Okay, I put USDT. Let's take a look at the Aussie dollar. Now, this, by the way, this thing is correlated to the S&P as well. All right. Whenever the S&P rallies, this thing typically follows. It's just like the New Zealand dollar, which I got stopped out of. Now, with the Aussie dollar, look where you are. All right, that's a resistance area right there. What price is that? That's around 74, what is that, 74.70, around there. And it's starting to hesitate a bit, right? You have a potential double top in a resistance area. Current candle is a, what, doji type of candle you got there, indecision, in an area where indecision is likely, okay? That's not a sell signal yet, but that can turn into a sell signal. Certainly, I wouldn't be interested in buying something like this here. I'd be looking for shorts. And something like Aussie dollar, I would short it. Now, here's the thing. Aussie dollar, you know, it's been following the S&P. you have these higher lows, and it has not made the higher high yet. But this, when we look back at the weekly chart, look at this. That's not really very significant. Yeah, it broke this previous high going back to earlier in the year, right? Broke that previous high. Okay. But it's still near this resistance up here. Consolidations are like that. People need to understand this is not a longer term trend. I would say the midterm trend on something like this is consolidation, and we're at the range high. So I would be considering the short side, not the long side. You know, if you want to go long on something like this, at least wait for a pullback to a range low, right? That would be 72.33 area, something like that, or in the low 72s, perhaps high 71s. That would be the place to be looking for something like that for swing trades. I'm talking about swing trades here, all right? A double bottom would be ideal if you can get a double bottom there. We see that all the time in the S&P. Again, that would be good for a swing trade. These instruments, Forex is not usually a good idea for long-term stuff, okay? Usually a lot of times there's a cost involved. You have to pay interest on some of these things. It's just not worthwhile. So nice question. Thank you for asking. All right, one more from TradingView, and then I'm going to jump back to the other one. Dash. I don't hear from that one very often. USDT. Let's take a look. Okay, so here we go with the hype. All right, people get excited, like I said, but this is good. I'm glad people bring this up because now we can put this on the radar. But this is why people were not asking me about Dash a few weeks ago, right? I haven't heard from Dash in a long time. That's where people should be asking me, right? But no one pays attention to them there. Then now they pay attention because it looks like it's going vertical. On top of that, you probably have oodles of fake gurus running around saying Dash is the next Bitcoin and all that other nonsense. Stop listening to fake gurus. So you have a resistance right there. Okay. Actually, I have a theory on fake gurus. I'm not going to share it all right now, but they're actually necessary for the environment. We actually need them because they're the ones that promote activity. And without activity, without the herd jumping in and reacting to these things, it would be a lot harder to make money. Harder than it's hard enough as it is right now. It'd be even harder if it's all professionals, right, in this business. It's like a tight poker table. So fake gurus actually make things move faster. All right. Anyway, you have a resistance right there. 123.80 and that. So this is a bad place to be buying. If you're long, this is a good place to be reducing exposure, taking something off the table. You know, I'm always going to say that, right? Never a bad time to take something off the table, especially if you're over 1-to-1 reward risk. But as far as a new position right now, no way. No effing way. This is a resistance zone. What price is this here? This is around 150 area, right? This resistance up here. So you have an entire zone in here. Bad place to be going long. So if you're looking for longs on something like Dash, your next support is going to be in here somewhere. Okay. That's around 103. You can round that to 100. So right now you're fooling around 122. Wait for the pullback. All right, at least a higher low. You have nothing there. There's no reason to get into this thing right now, unless you like chasing things and taking ridiculous amounts of risk. So wait for like a pullback to those lower 100s. Again, the bigger picture on these things is not good. And you're not going into an environment where these things are going to be supportive. I don't care what the story is with Dash. I don't care what the amazing things that they do and their white paper and all this other garbage. There's no support for a speculative environment. It's only going to get worse until the Fed changes their tune. Okay, so anyway, that's why all of these coins, I have no optimism at all. Not now. Wait for a pullback if you want to get involved. This is a bad time for these. All right. If anything, I would classify this as a range, and you're probably at the higher point in the range. This is not a bullish trend, even though we have a higher low. It's not a bullish trend yet. It's going to have to prove itself further. Does that make sense? Okay, so that's Dash. Thank you for asking. All right, let me jump back. Let's see, Nicola. Man, I got a long way to go here with these questions. Now, EV sector, right? Obviously, it's been trying to come up a bit here. Let's take a look. Whenever you take a look at these, you got to look at the other ones too, right? Look, they're all popping, right? They all have this little pop going on. So look, these are like a flavor of the week type of market, these electric vehicle stocks. Now, let's just take a look at a couple of interesting things here. you have a consolidation right there, right? So it found itself a bottom at, what is that, $6.41, and it broke out a bit. Okay, that's cool. But the thing is, it has another resistance right there. That's an old support. So chances are it's not going much further. Again, this is when people get interested, when these things are doing something that looks spectacular. You should be interested when it looks ugly, okay? That's usually when people stay away from these things, but this is not a time to buy. If this sector starts to improve, it's possible. Let's take a look at a weekly. Look how badly these things have been beat up, all right? Because there was so much hype and so much nonsense in these. Like I said, flavor of the week. This thing has a long way to go before it proves any technical significance. Just because we have a little pop doesn't mean we have a new trend just yet, right? So something to keep in mind. If you're looking to accumulate something like this because you believe in their business model and you believe that whatever, then at least you're not buying the highs, but you have plenty of opportunity here to wait for better prices, at least the midpoint of the range, which could be around what, $8.22. It's $8.82. So it could easily pull back 50 cents to $1 pretty easily and still not be doing anything significant. So you might as well wait for better prices if you're interested in accumulating some of this stuff. But like I said, these stocks are not likely to be supported, especially if they have to borrow a lot of money. They're going to have a hard time going forward until things change. Like I said, the main market you want to keep an eye on is this, really, right here. Look at that. Okay, you know what that is? That's the 10-year note. Does that look bullish to you? Let's take a look at the weekly. All right, now I'm bringing this up after Nicola. Look at this. I called this chart back in August. I saw the change, okay? And that was before Chairman Powell started talking about it in December. These things often are they're pricing in expectations 6 months in advance. That's called a discounting mechanism. That's what markets do. So right now, this is bad. This is rising rates. That's what this is, and that's pretty significant, right? So stocks typically won't do well as long as this looks like this. And I don't care if we get a little green candle here and there. The bond market has a long way to go before it turns this thing around from a technical standpoint. The bond market, when it turns, it's probably going to take 4 to 6 months. 4 to 6 months. I have to emphasize that before you start to feel it in the stocks, the growth stocks. So as long as the bond market looks like this, I would not be very optimistic about growth stocks or altcoins. Okay, they're going to have the temporary pops. If you're interested in swing trades or really short-term oriented trades, in and out, that's fine. There'll be plenty of opportunities for that, but don't get any long-term ideas, not now. If you want to play the inventory game, look, there's never a bad time for inventory, but in this environment, I would suggest skewing smaller, not bigger, because there's plenty of opportunity for better prices, okay? All right, so now that leads me to my next question here from St. Paul. What do you think about the yield curve, especially after today's 10-year rally? Okay, so this is it. This is the 10-year note rally. These are the futures. So if the yield rallies, the inverse would be the price, and that's what this is here, right? So that's what he's talking about, the lower low. So everything that I just said, rising rates, right? The market's pricing it in for whatever reason. I don't care what they point to as far as fundamentals go. Doesn't matter. All I do is I look at this chart and I say, rates are rising. That's bad for a lot of things. Okay, that's all I need to know. So yeah, as long as that chart stays that way, it's a lower low. So it's reasonable to expect lower lows to come until it changes its tune. Now, let me ask you, do you see a double bottom here? Do you see a higher low? Do you even see a bullish candle? Nothing. Okay, it doesn't mean that this is going to go in a straight line. Sure, we'll pop up a bit. But as you can see, when these things pop up, like this gets people all thrown up. The bonds are rallying. The bonds are rates are going to go lower. No, they're not. This thing has a long way to go. All right. So don't get caught up in that nonsense. As long as the bond market looks like that, you have to keep your expectations very conservative, I would say. All right. So let me move on here. So good question, St. Paul. All right. We got Mick from Michigan. Okay. We got Woo. LTCN. All right, let's take a look. LTCN. Is that a stock? Oh, Litecoin, Grayscale. Okay. Yeah. Any thoughts on this? Stay away from it. Okay. Again, here's why I say that. For one, you're paying a premium on these Grayscale products, which, people, I guess, it's if you don't have access or if you don't want to open up a Coinbase account, that kind of thing, then, these things make more sense, but you're paying a premium, right? I would not get involved in these right now for everything that I just said. If you're going to get involved, now at least Litecoin is, at least it used to be up there with the leaders. I guess it kind of still is. How much is Litecoin? I mean, let's take a look at Litecoin. Yeah, it's going to obviously follow Litecoin, but Litecoin, if Bitcoin can't rally, Litecoin's going nowhere. I don't care about this little blip. It means nothing. All right. Look at the weekly chart on Litecoin. It's way off its highs. These little rallies are meaningless, right? This thing has to take out this resistance here at 143.88. Right now you're at 116. It's got a long way to go. So anywhere between here and like basically 150, you're dealing with noise. So that's going to affect that ETF, which was what, LTCN. That's going to affect something like that. So if you're interested in accumulating the ETF version, again, you have to do it conservatively, perhaps a couple of shares once a month or whatever, because these markets are not in a healthy position right now. Even though we were at lows, which is better than highs, the problem that we face is we're not in a supportive environment. I mean, just look at that bond market. These things are going to have a hard time. All right, it's going to put pressure on them. So I hope that answers your question. All right, let's move along here. Okay, so we got Bill. Another boring sunny day. I'll take a boring sunny day. I like sunny, right? Because I'm from New Jersey, and the sun is just not the same here. All right, Mr. Plow, good to see you. Kai, PLNT. All right, it's a stock. Let's take a look. PLNT. So what's going on here? Oh, Planet Fitness, great. So right off, I can tell you, midterm trend. And this thing's been in the consolidation for a long time. Let's take a look at the weekly chart first. All right. These things, a lot of times, they get hyped. And Planet Fitness, these fitness, these what do you call it? They're usually like a fad. But you have here, look at this. Look how it's been consolidating for quite some time. This is a weekly chart. That's your range. We can argue that there are higher lows and higher highs, right? We're going into a less supportive environment, as you know, so many stocks are going to feel the pain. They probably don't give you any incentive to hold on to this thing. I'm guessing it's a growth stock. How much money is this thing? $84. So in something like this, if you're interested on the short side, that's what it's developing into, but you're at the midpoint of the range. So it's really a bad spot to be doing anything long or short, because that's the most random area. You want to wait for some sort of support, right? And that would be around there. I mean, look recently, what's this thing coming off of? 73.72. That's the extreme low. And then you have a more common low around this price here, 79.43, and you're fooling around 84. So Kai, if you're interested in longs, then that's your zone, okay? This would be a zone. So any return to this zone would be a place to consider longs. Yes, you have a lower high. If you're looking for the aggressive short, I mean, it's in play now. Again, this would be a good one for options, for those that are into options. I'm not going to get into detail on that because it's going to be very confusing. But that the first thing, if I saw this and you asked me how would I trade that, I would think options, first of all. Second of all, if you're interested in long, then this would be your area. Okay, good place for a failed low, consolidation, failed low, or double bottom. That would be a good place for a swing trade long if you're interested in something like that. And then you'd be looking for it to at least try to return to the midpoint of the range. That would be your expectation on such a pattern. But I like the general pattern. These consolidation patterns, they're not a bad thing when you're at a support or at a resistance. They're a bad thing when you're in the midpoint. So that's why you don't want to react to these. But when you put these on the radar, perhaps you set up like a notification thing, like on TradingView or whatever, it gets to that price, then that's where you should be interested in looking for confirmations. Does that make sense? Because that lower range level there, what is that again? Low 70s. That's going to be a place where the location favors a reversal. If the price action gives you the reversal, then it's time to go, right? You can measure your risk and then you decide how you want to go about it. So I don't follow these fitness stocks very closely, but okay, I'm assuming it's a growth stock. So thank you for asking. Very interesting to see. All right. So sure, I got some guys sharing some really nice charts with me in the other place. So hello from, okay, so I got that LTCN. Okay, Simple Joe. Hey, good to see you. Thank you. All right, when do you think is the best entering position in Bitcoin chart? All right, so Mick there. Like I said before earlier, I think I answered that question with Bitcoin. It's for a long swing trade. I'm being very specific about that because again, you have to understand before you get into a trade, you really need to know what type of trade you want to get into. A lot of people, if I say to them, "Oh, what kind of trader are you?" They're like, "I don't know. I'm just a trader. I don't know." You have to know. Are you a swing trader? Are you a day trader? Are you a position trader? You could be all three. But the thing is, when you're getting into a trade, that trade needs to be in a category. When I'm doing these streams, I'm talking about swing trades. Okay. So I'm not talking about day trades. I'm usually not talking about investing, but we do get that. Sometimes that comes up in questions. A swing trade is like a short-term investment. You want to think of it that way. It's very short-term. It's like a few weeks, maybe a month or two. So 35K is the place for the swing trade long on Bitcoin. Like I said earlier, that's what I'm looking for. And that's what I'm waiting for. Anything in between that, I don't care. If this thing goes back to this support over here, what is that? 39, 38, I don't care because it's not a price I'm interested in. There's too much random action there. All right. So I want to see more extreme. I want to see 35K. If the market can't give me 35K, then I have nothing to do. All right. So good question. Okay. Good question. Let me move along here. Would you please share your thoughts on Luna? Tony wants to see Luna. Luna, another one that's been hyped recently, right? I've been keeping an eye on this chart actually because of the recent strength. It's obviously doing its own thing. I'm sure there's a hype chat room somewhere where people are pushing this thing. Look at this. This is the weekly chart. So as we know, when you get to these weekly highs, it's typically a bad place to be looking for longs. So I see this first thing I think, not going long here. Okay, it's the first thing I think because I'm a contrarian. I think the opposite of what's obvious. I automatically think opposite. I may not do the opposite, but I think it. So no longs. That's number one. All right, because we're near a resistance area. Now, number two, let's look at the daily chart. Now, clearly, the general trend, we saw the bigger picture is bullish. I would say the short term and the midterm, we can argue that it's bullish. Let's see, going back 6 months. No, I'd say it's range bound, right? Because you have a range low here and a range high here, and it dates back a few months. Okay. So I would say that that's basically a consolidation because it hasn't made a higher high. This barely higher high doesn't count, all right? By a couple of points, whatever, is meaningless. So with that being said, we're near a range high, and that's your resistance. Price right now, the short term, we can argue is bullish, higher lows, higher highs, right? Okay, that's fine. Will it break out and go higher? The structure favors that, but you have these levels to contend with. You have that to contend with. I wouldn't go long on something like that, especially in this unsupportive environment. Like I said, you're going to have these exceptional coins that come out and do their own thing, something like this. And yeah, it's popping again. But this is a bad place to be buying. If you're long and you're looking to get out of some, this would be a great place to reduce exposure, to lock in profits while you have, the Robinhood people taking it off your hands. Like I said, we need people like that in order to help you reduce risk. But that's not a place to assume risk. Okay. Only reactive people do that there. I don't care if it goes a little further from here. You have to understand something because people will say, "Oh, you told me not to buy it and I didn't buy it and then it went there and now I'm upset because I missed it." Well, I don't care about where markets go. I don't care about profits, right? Because when you do, you're playing this game from the wrong side. I'm only interested in probabilities. And I want to be able to take a trade that's going to give me the better chances and also give me better control over my risk. I know that if I take 100 of these trades or 1,000 of these trades, I'm going to get caught, okay? Because generally over time, you're buying resistance. That's a place that's more likely to find selling activity, right? So my point is this: wait for support, okay? Your supports are here. If you're interested in a swing trade. That's 75.5, around that area. Right now, this thing's at 95. Wow, this thing's going to pull back 20 points. I don't know if it's going to pull back 20 points. The question is, if it pulls back 20 points, that's a opportunity that offers you a better probability and a better reward risk. It's either you wait for that or you let it break out and you let it retest the old resistance. Look, I miss a lot of moves as a result of my conservative perspective, but I don't lose money missing moves. Okay, my account stays intact. I take no risk. I look at this from a risk perspective, not a reward perspective. That's why retail traders don't make any money. You have to understand something. There's so much stacked against us as a retail trader. I'm a retail trader too. I'm not an institutional trader. I don't have inside information. So all I can do is control my risk. Okay, that's the only thing I can control. And the other thing I can do is control my behavior. And I recognize that one of the only imbalances that we can capitalize on is sentiment, because unless you have a specifically defined statistical advantage, and what I mean by that is you should be able to come up with, if you have a statistical advantage, a real one, you should be able to prove mathematically that you have a 68% advantage when you take this trade. No one can do that unless, of course, you're a financial engineer and you have a real statistical advantage. But usually they're capitalizing on inefficiencies that we cannot see. All this junk that we see on a chart, most of it is, for one, it's old, right? Even right now, you say there's a current candle. This is old. It's old information. These are trades that were transacted. We can't see the future. So we need to anticipate what's likely. And the only way we can do that is through probabilities. And I can't even assign a hard probability to that, okay, based on this stuff. So I have to take more of like an anecdotal probability. And what at least helps me are the levels with something like that. So my point, again, I know I'm talking like some fancy language here, but what my point is this: if you don't have that statistical advantage, your chances of making money consistently are none. Okay, I have to put that out there. I don't sell hope. I don't sell these dreams with mega mansions and all this other nonsense. You're not going to see me with the lifestyle hook because it's nonsense. All of that. It's just to lure people in. Anyone with a true statistical advantage will not share it because they can't. If you ask a professional trader or an institutional trader or an algo trader, someone that works for a market making firm, can you show me your strategy? Yeah. They're not going to show you. Most of them sign non-disclosure agreements anyway. They can't show you. But there's a reason why they can't share it. So all these fake gurus that come out and say, well, look at my oscillator, it's magical, and it's got a 90% win rate. It's all nonsense. It has a 50% win rate. It's random, okay? There's no advantage. There's no statistical advantage to any of this stuff. So the best we can do is use perspective to get a sense of imbalances in sentiment. That's where that's the opportunities I look for. There are basically imbalances of sentiment because inefficiencies are very, very hard to find. And the markets are not getting less efficient. They're getting more efficient, which is a bad thing for retail traders because it means there's less there's less alpha, if you want to call it that, to extract from the market because the market is random. And it's getting more random, not less. People say, well, how could you say it's random? Markets trend. Yes, markets trend, but I'm talking about the short term prices are basically random, okay? There's no, like I said, if you don't have that advantage, you can't win, especially with the costs and the other ways. All right, I'm going on a rant here. That's my big rant for the day. Let me move on because I have like a million questions and I'm not answering them. All right, anyway, just trying to, give you some sense of reality here. So that was Luna. Let me go back to this other. Let me go back over here. All right. So Thomas from Mount Shasta, California. I don't even know where that is. Okay. Chilly. It's chilly there. All right. Mic is not as good. Okay. I hope it improved. I moved my mic closer. I hope my mic has been better. I don't see any complaints on the other side here. Okay. That was a while ago. That was like an hour ago. All right, let's see what else we got here. Hey, Dave, good to see you. Okay, great to be able to see. Okay, cool. Yeah, Todd, it's nice to see everyone. Just saying hello, just going back in the chat. Okay, Yeah, well, because travel, I finally, it only took me 6 months to figure out technology. Like I said, I'm stuck in the year 2000. I still think computers work that way. Okay, QQQ, Avi wants to see. So when you look at the Qs, right, that's the NASDAQ 100. Like I said, we talked about the S&P before. S&P, NASDAQ, Russell, they're all going to move the same, right? Bitcoin, they're all going to move the same. They're all linked right now. We are at a resistance. So although that we had the magical rally, this magical rally came as a result, it came after the FOMC meeting that we had on Wednesday, right? This basically came after that because the market was really happy about what he said. He was very dovish. Now we are at resistance. We are at resistance in basically a short-term bearish structure. I would not be buying stocks here. I would be looking for shorts. Okay. In fact, I am looking for shorts. I have no problem shorting the NASDAQ, especially at a lower high resistance. I suspect that these markets, NASDAQ, S&P, and all them, I suspect they're going to be going into consolidations, especially with the bond market looking the way it looks. Now, I don't trade on fundamentals. I want people to know. I'm not sitting there saying, well, the bonds look like this, so that means I can trade like this. I'm not a macro, one of those macro, global macro investors. I don't do that kind of thing. But I do use that to at least give me a sense of what's reasonable to expect, right? On a very general basis. Are we in a easy money environment? No. We're going into a hard money environment, and it's going to go into a even harder money environment because that's what the bonds say. So with something like that, it gives me more confidence about resistance levels. So bad for stocks, bad for buying stocks right now, unless you're a day trader and blah, blah, blah. Okay, fine. I'm not going to talk about that. But the point is, I'd be looking for shorts. Okay. And this is the level. We're at the level right now. What is that? 350. Right now, we have an indecisive candle. So a break below that candle, the low, right? What is that low? 345.5. That would be tomorrow. You have to wait for the candle to close, of course. And then tomorrow you get the break. That's your sell signal. Now, here's the thing with something like this. When you get such a sell signal, and if you're going to expect that, like, well, it's a bearish trend. I mean, it's aggressive. All right. I'm not making fun of you, by the way. It's just my dopey voice. I don't want people to get mad. One time I after a Seinfeld impression, some guy I think he was from the Netherlands, he got mad. I don't know why. Seinfeld, since when is Seinfeld popular over there? Anyway, so my point is expecting that would be unreasonable, okay, in this environment because things change so quick. So expecting the midpoint would be more reasonable as far as a short goes. So in a situation like this, the way I would trade this if I got the signal, because it's not a signal yet. All we have is the location, which is the first step, right, of the trade idea. Once this closes, my risk is going to be obviously based on the size of this candle and all that stuff. If I'm getting 1-to-1 by the time we reach this midpoint, if the market can offer me such a profit target, I'm taking money off the table. Okay. Now, at that point, I would give it a chance to see if it wants to run. I would give it that chance, especially if I'm not getting any type of reversal signal. But my point is, in this environment, don't look at levels for profit targets. Look at the ratio of what you risk. 1-to-1. All right. So 1-to-1, 1.5-to-1, 2-to-1. Those are where your profit targets should be because it's a function of risk. People get all wrapped up and obsessed with levels because they want to maximize trade, every little penny. But you're asking for trouble because you're dealing with an environment that's not exactly clear, right? There's a lot of uncertainty and things are going to be wild. So you have to look at it from really a perspective of risk and a function of risk. Take the money while you can. That's the type of environment we're in. This is no longer the easy money. I'm just going to sit back and the market's just going to pull back and I'm going to hope and it's going to go back my way. There's no skill involved in that. That's why everyone is a genius in a bull market like we saw in the previous 2 years. Why we have so many fake gurus, okay? Because everyone's a genius. There's no skill in sitting back and letting the market come back for you. The skill is in managing risk. So anyway, that's my point with Qs. That's what I'm looking for. I hope that makes sense to you. All right, so I'm looking for shorts on that. All right, let me jump over to the other side here. What do we got? All right, so I went over Luna, went over Bitcoin, Okay, hey, no problem. Good to see you. Glad to see all of my TradingView people. It's been such a long time. All right. Okay, cool. Steve, good to see you. Good to see you. Is there a way to watch it again? Yeah. So Burak, hey, good to see you, Burak. Uh, once I finish the stream, you'll be able to replay the stream on TradingView. Okay. Once I turn off the stream. So no problem. No problem. Anyway, I was just talking a lot of stuff anyway. I was talking about the economic calendar. You didn't miss a whole lot. I talked too much. All right, St. Paul. I was referencing the not the okay, but no, but you know what? St. Paul, it's the same thing. The yield is just the inverse. The US 10 yield is the inverse of the futures. So I use the futures. Okay. Stian, hey, good to see you. What about NVIDIA? Stian asks. NVDA. Let's take a look. Stian. All right. So now, if you notice, I just switched from the Qs to NVIDIA, right? Does this chart look the same? It should. They follow each other, all right? NVIDIA is a NASDAQ stock. It's like a NASDAQ leader, basically, a semiconductor leader. It's in the same situation. So a lot of people, and I've talked about this in other places, a lot of people are going to get sucked into this. They're going to think, whoa, back to the old rally time and this and that. But the Fed is not on your side. Okay, Powell is not going to help you out this time. So no longs, no longs. If anything, this is a short setting up. So if you happen to be long from the range low, excellent place to be taking money off the table. But like the NASDAQ, I suspect these are going to go into a consolidation because that's what the NASDAQ is likely to do. Okay, and they're going to be affected by the rising rate environment. So I keep bringing that up because it's important to understand the overall context, even though I'm not taking specific trades on that, right? So I'm not a big fan of shorting these wild stocks. If I'm going to short something in the NASDAQ, I'll short the NASDAQ itself because you don't have gap risk. It's just easier to deal with. But if you're aggressive and you want to short something like this, again, options offer a great way to do something like that. And like the other chart we looked at earlier, you're just looking for a return to the midpoint. That's reasonable. Based on this structure, that's reasonable. Will this lower high turn into a lower low in the next few weeks? It's possible, but we can't predict that from here. There's no way to know. It's also possible. I mean, there's so many possibilities. It's possible that we get a higher low somewhere. Maybe it finds a higher low at the midpoint. Maybe something unexpected comes along. Maybe the Fed says, hey, we were wrong about raising rates. We need to go back to negative rates and blah, blah, blah. They say something stupid like that and the market will rally. Okay. No one sees that stuff coming. Just like back in December when we were up at these highs, okay, the NASDAQ and S&P. And I remember it was like week 4 and the stock market was making all-time highs. And what was I telling people? Stay away from these stocks. Stay away. What was the mainstream news saying? Hey, the stock market, good time to be buying. Oh, next year is going to be the year of the stock market. Blah, 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 right? And we are dramatically lower off those highs. It's not, I had no way to know that we were going to see those geopolitical tensions or the rising rate situation, right? I had no idea. All I knew was we were at extremely vulnerable levels, right? And that's where we are now. Extremely vulnerable level. So no longs, if anything, shorts or exit, reduce risk in these situations. Not a good place to be accumulating stocks. Does that make sense? So thank you for asking. Again, whenever you look at stocks, especially something like a NASDAQ stock, always use the Qs, or if it's like an S&P stock, use the S&P, use the parent index as your timing gauge, because basically whatever the parent index does, the stock is likely to follow. If the stock doesn't follow, then the stock is showing relative strength or weakness. And that could be an opportunity as well. But right now, these things are, they're stuck. They're stuck with the S&P and NASDAQ, and I have very little optimism about the stock market in general for the reasons that I just mentioned 10,000 times. Okay, so Luna. Okay, I went over Luna. All right, Tony, cool. A lot of questions about Luna. Probably time to short it. I'm joking, but that's usually, when I don't get questions about stuff, like I was going to say Cardano. No one asks me about Cardano, but here we go. FB asks me. Let's take a look. right? Usually when people lose interest in these things, that's usually the time to start paying attention, right? Think the opposite of the herd. So look at this thing, Cardano. You know, well, I remember someone asked me one time, can you please talk about Cardano, but please don't get mad, because I would get like all crazy and I'd go into like 10,000 rants because the hype was so bad on Cardano. And how many people got stuck up in here or got stuck on these pop-ups because they think, hey, Cardano is going to be the next blah, 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 because they have a great white paper. Okay, so enough of that. You know what I'm going to say. As far as trend goes, look, lower highs, lower lows, all over the place. You have a potential lower high situation developing here. Look at these lines on my chart. They were here before I even pulled the chart up, because obviously we've looked at this before, right? Look at this area here, dollar, basically $1.02, $1.02. It's basically, you can round that to the dollar even, right? That's your resistance. That's basically your resistance. And you may say, no, it's not. Your resistance is right here. No, this is the resistance. It's an old support, new resistance. It's a whole number. It's a psychological number. It's an important number. Until you take that number out, this thing is going nowhere. So don't get sucked into this little pop-up, okay? Whenever you see a little bit of green, a few days, again, all the fake gurus, the fake guru machine comes out and start, Cardano is going to 50x by next month, right? They all start saying that. By the way, even if I wanted to say something like that, I can't. Do you know why? Because I'm a chartered market technician and I have a code of conduct to follow. Something to keep in mind when you're listening to someone that has no professional designation at all. I have to, if I'm going to produce analysis publicly, I have to stick to some kind of conduct or standard. I can't come out and say, Cardano is going to go to 500,000 by next month. I can almost guarantee it. I can't say things like that. They'll take my designation away, right? And I work very hard to get that. So just something to keep in mind. If you're going to listen to someone, at least make sure they're an industry professional. And it'd be nice if they have a CMT. There aren't too many CMTs. It's not easy to get. So anyway, point is this, lower high. No reason to buy this thing. Yeah, it may fool around a bit if you're interested in a swing trade or something, but there are so many other opportunities that are better, higher quality than this. So I wouldn't do anything with this. All right, if you're interested in Cardano, maybe you're thinking long-term. When you're doing long-term, any price you can get involved, it's about the size. But even with these, you're better off with something like Bitcoin, okay? Go for the leader, Ethereum. Don't go for these junk coins. If you're interested in something like this, at least give it a chance to go back to 78 cents, because I think there's a decent chance that it gets back there and tests it, especially in this environment. These speculative altcoins are going to have a hard time, okay? And that hard time is going to continue. So give the 78-cent level a chance. Be patient. That's all I can say about something like that. Otherwise, these things are pretty much a waste of time. So thank you for asking about Cardano. Yeah, okay, cool. Good to see you. All right. Yeah, that's right. Chartered Market Technician, CMT. We are required. You could go to their site. You could check that out, right? We are required to follow a code of conduct. I'm not promoting anything there. I'm following the house rules. I'm not promoting anything. I'm just saying we must follow that. And otherwise, we can get into problems. And we don't want that. So, okay, travel. Have a look at weekly time frame or monthly. Does it look bullish to you? Travel. Are you talking about Bitcoin? I think you're talking about Bitcoin. I don't know. I usually check out a weekly Bitcoin. He's asking, does it look bullish? I'm assuming you're talking about Bitcoin. It's actually range bound. Okay, bigger picture is bullish. There's no question. It's still a higher low. We're still in a higher low area. That's not a bearish thing. But the smaller picture is, and especially the short term, the very short term, is bearish. So testing on this bigger picture, testing the 20Ks is still possible. It's not unreasonable. Now, something like that may take a few months to play out, possibly, but it's still within reason. That's why, again, even like accumulating Bitcoin, I would be patient with that, and I would skew smaller until we see a structural change, okay? I wouldn't, unless you see a really extreme price, you're better off. I think it's just more responsible to skew smaller, all right? Solana, all right, Ing wants to see Solana. Let's take a look. Here's another one. People used to ask me about this one all the time. What about Solana? Look at this. This is why, like, when you look at stocks, coins like Rune or coins like, what was the other one, Luna? They're all like doing this kind of thing right now, right? And everyone's all excited about them and blah, blah, blah. Well, this is what comes next typically, but no one sees that coming. So this is why when something is pushing highs, if you go back and watch some previous streams where people asked me about Luna and we were doing this, the first thing I would tell you is stay away from it until we pull back. Now, I don't know how far it's going to pull back, but all right, here we are now. And we are at better levels. Clearly, these aren't the highs. So is this a good long? Well, let's consider the trend categories first. So long term is still bullish, right? Higher lows and higher highs long term. Midterm, I would say bearish, right? Lower highs, lower lows, going back 3 to 6 months. Short term, I would say consolidation because we have a common low, right? Sort of bearish. We have some lower highs, but it's not making lower lows. So you have a potential change that's trying to unfold here. But keep in mind, please keep in mind that this is an altcoin. So if Bitcoin tests 20K or 25K, you better believe this is not going anywhere. Plus, we're not in an environment that's supportive for these. You have to keep those things in mind. These coins are not leaders, they're followers. So any little blip that you see here is just noise. It's nonsensical. It's meaningless. Don't get sucked into that. If you're interested in long term, you know what I say? I say, give it a chance to test those lows again, and then maybe start accumulating some there, because these things, I mean, I could be wrong. All right. I'm not saying, oh, well, I'm a CMT and I'm always right. I'm wrong all the time, but I adjust. And I'm only looking at this from a perspective of risk. Like I tell people, I listen to price. I let the market tell me what it wants to do. And then it does what it does. And then I adjust. Okay. So in a situation like this, I'm not anticipating optimistic things for these. So there's no reason to be in a hurry to buy them now. If you're interested, let them push their lows, and that would be a time to consider accumulation if you want. But when it comes to these, because we're in such an unfavorable environment, if you're going to play that game, you might as well play in the leader, Bitcoin, because they're all dependent on Bitcoin. Maybe at some point they'll break off and go on their own, but we're not at that point yet. All right, so just some things to keep in mind. If anything, there's nothing to do here with Solana. Wait for the 75, mid 70s at least if you're going to do anything. All right, like a swing trade or something. And of course, you need confirmation. So I hope that helps. I hope that gives you some perspective. All right. I know you focus on risk, not price structure. I know, but hey, okay, no, yeah, right. I understand. All right, that was like an hour ago. Hey, Alex, good to see you. eGold, but it looks like it's trying to develop a lower high. All right, my eGold guy over here. Always talking about eGold. He's like the only guy that brings it up. Yeah, so it's trying to do its thing. Like we just looked at a dozen charts that are trying to do a similar thing, right? Yeah, I see a little mini higher low in there, but you know what? It's meaningless. Why is it meaningless? Because we have a range low right there, and we have a range high basically right there. So I would characterize this as a consolidation right now, especially since it's not a leader. I don't see eGold at the number one of the altcoin list, right? So even though you have that little pop, it doesn't matter. As long as it's inside that consolidation, I would certainly not be taking a new position here if I was interested in this thing, which I'm not. If anything, like I said, be patient and wait for the range lows. The range low on this, 132.63, wait for the range lows. If Bitcoin breaks, and Bitcoin may take a few months to break, it's possible. We may test 45K first and then break. Like I said, these markets are random, and there's no way to know which way they're going to go next. What we can do is find levels and anticipate where certain types of price action are more likely. Then we let the market prove that price action is developing, and then we can measure risk. Even at that point, we can still be wrong. That's why we measure risk and we control our risk, because we're going to be wrong, right? And we want to be able to control that risk, not be wrong and then hope, because hope is not a strategy. So something like eGold, there's nothing to do here. All right, you're near a resistance. If you're in some and if you have a little profit you want to take, hey, it never hurts to take a little profit, but there's nothing to do. I would not put any significance or any weight on this. Wait for the test of low. these coins are likely to do that, right? But again, it may take a few months. All right, let's move along. Thomas, what about a structure change in Bitcoin or the stock market look like? Break of resistance? Feel like a false breakout? Any fundamental change? Okay, good question, Thomas. So Thomas's question. Hey, check this out. Watch this. Watch this. Thomas's question is on the chart. How cool is that? Here's his question. I don't want to do that for all the questions, but this is an interesting question. What would a structure change in BTC stock market look like? Break of resistance level would feel like a false breakout, and any fundamental change may be hard, right? So take that off. Now, what would a structural change look like? Now, usually the fundamental change will occur after, right? If there's usually it's getting priced in. So there are a couple of ways that the structure can change. For one, we hold the low, and we would have to, the structural change I'm looking for is we have to break out. We have to take out 45K decisively. And then usually some kind of change will come after it, right? That's where the market knows in advance, right? The market prices in all known information in the world. Think about that. If that's the case, insiders with real information, not the junk that's fed to retail traders, I'm talking about real insiders. They're acting on price way before anyone else. And when the market starts to change, that means the market knows something, right? The market is pricing something in that we may have no idea what it is. And then look, what a coincidence. In 3 weeks, some major announcement comes out. What a surprise, right? So usually the fundamentals will begin to back up the structural changes. Sometimes it begins with a fundamental change first, and then the market has to recover. But think about the bonds for a moment, right? The bond market. The bond market reversed in August. It got bearish. In August of 2021, that's when I spotted it, and it started to break supports. I noticed that, and I brought it up all the time. No one cared. No one wanted to listen to me. They're like, bond market's boring. Who cares about bonds? It's so boring. Only bankers trade bonds. Bankers are boring. So that continued, that trend continued, and the fundamentals really didn't come about until December, right? That's when Powell comes out and says, well, I was wrong, and I'm going to raise rates now. I was just, transitory. What does that even mean? I made the word up. I just wanted to sound smart, right? So the bonds were pricing it in advance. So my point is, the structural change at this point would be break of resistance, and then followed by a higher low. That's what I want to see. That type of decisive move. Now, the initial breakout is not the time to buy it. Okay, that's what everyone wants to hear. Oh, I want to buy the breakout. The chances of going into another false breakout are very high. I wouldn't buy that breakout. The structural change will take months to prove itself. Months. And most likely, we will see a change in the bond market first. Okay, and that I'm not talking about like one-to-one, like, oh, look, the bond market changed today and Bitcoin's going to change tomorrow. No, the bond market will take a number of months to turn, right? It'll stop making lows. It'll put in a double bottom at some point. It'll hold, it'll consolidate at some point, and eventually it'll break higher. That's when we will have a signal that rates now are starting to come off. We haven't even begun that cycle yet, okay? We're just getting into the rising rate cycle. It's just beginning. So these things have a long way to go, all right? But that's what a structural change would look like. If Bitcoin breaks the 35K support, that means now a structural change, we'd have to establish a new low at some point and then not go below that low and then spend some time there and then break above the resistance and then put in a higher low. It's going to take a long time. So it's not something that occurs quickly. It can take 3 to 6 months. All right. Something to keep in mind, but I hope that answers your question. All right. How am I doing with time here? Okay. I gotta wrap this up here momentarily. Hold on. Let me just run through some of these. US 30. Okay. Hold on. Your Cheds, Garrett, are all very consistent with your analysis. Focus on price and support resistance. All solid. 22-year-old. Okay, hold on. The 22-year-old millennials with Lambos focus on Elliott waves and all that subjective. Elliott wave, it's subjective. I'm not gonna talk bad about Elliott wave because I use it, but I certainly don't depend on it. And I do understand its subjective nature. When I teach people about Elliott Wave, you know, I talk about its pros and cons, right? But yeah, the fake Lamborghinis, the rented Lamborghinis, they're really ruining the Lamborghini name. Seriously, they need to stop with that. They just stop making them rentable. Okay, hold on. UFI, let me just see. When you talk about bond market, are you referring to some general? Well, so when I talk about the bond market, the 10-year note specifically is what I look at. I look at the futures. You could look at TLT, which is the ETF, right? It's the same idea. Okay, you can use that. What do you think about monthly ABC correction in Bitcoin? This is still being an A leg, ABC with Elliott Wave in play. The B leg going on somewhere between 50, just to suck everyone in. ABC, okay, I'll take a look at that. Choose your, oh wait, okay, hold on. Yeah, right. No, well, you know, the thing is with the labels on Elliott Wave, when you get a new structure, you have to relabel. So they're always alternate counts. That's just the way it is. But Elliott Wave does have some value. There's no statistical significance, but it does provide some perspective in some situations. What people do with Elliott Wave, for one, the reason why a lot of people like to talk about it, because it's very complex, and people think more complex is better. So they think that there's something magical to it or something better because it's complex. That's the furthest thing from the truth. Less is more in this game. So if I use Elliott Wave, it's in a very specific situation. I'm only looking for a certain type of structure. And if it's there, it's there. If it's not there, I ignore it. I don't sit there and sifting through, oh, look, there's a little ABC over here and another one over here. And, oh, we have a compound, blah, 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 and a blah, blah, blah. I don't do that. Okay. When I started out, I used to do that, but I don't do that. Anyway, okay, hold on. Let me just run through these. Reversal could be hard to determine in this. Well, Thomas, absolutely. It's definitely going to be hard. All right, just like I explained. What do you think about taking a long Netflix at support? Okay, Alex, hold on. Long Netflix. We'll take a look. Peter, S&P 500. I went over the NASDAQ. So S&P is going to be the same story. Bart, okay, hold on. I'm just running through these. Oh, man, I got so many of these. All right. How many more do I have? Wow, I got like a million questions. Okay, hold on. All right, just let me see. Just going back to the stream here. Just going back. Let me going back. All right, I'm not going to be able to answer these all. I apologize. Okay, I apologize. If I missed your question, come back next week and I will answer it. But let me just do a couple more here. All right, I'm just going to jump through a couple more. So US 30, I see a couple of questions about that. So let me do US 30. By the way, Peter, US 30. This is pretty much going to be the same as the S&P. Look, that's US 30 right there. It's the Dow Jones 30, right? The S&P, same. Does that chart not look exactly the same? So the analysis is going to be the same. They're the stock indices. They follow each other. The S&P is basically the main one. All right. So when you're following stocks, even if your stock is part of the Dow, the S&P is really like the main one that you should look at. These things are at resistance levels. Just like the NASDAQ I talked about earlier, okay? NASDAQ at resistance, this is a place to be going short, thinking about shorts, anything. Definitely not buying, if anything. If you're not comfortable with shorting, that's okay. But not a place to buy, if anything, right? The signal is not there yet. We have a potential inside bar at a resistance level. Now, what can be confusing about this is people are going to say, well, look, we took out this resistance, right? So it's a higher high. Isn't the trend changing? It might be changing, but the thing is, this structure is very tricky, right? Because we also have a lower high here in this area. So I will be more convinced of a trend change if we establish a higher low next. All right, but we're not there yet. That higher low would have to come, and this goes for the NASDAQ and the S&P as well. That higher low would have to come around here somewhere. That's most likely overlaps 382 retracement, that area there, or maybe even the 50 retracement, that area. If I see the higher low there, I'm still not going to be 100% convinced, but I'll be like, okay, it's possible. But it's going to be hard for me to believe unless I see a change like in the bond market or something, because how are these stocks going to rally? Where's the money going to come from? What's going to be behind them, right? So right now at this moment, I'm thinking short options would be a good choice for this. Again, I'm not going to talk about details on that, but the low of this candle has to be taken out, which is what? 34.344. So basically 34,350 or 34,3 even, 34,300, something like that would be your sell signal. Your risk would be defined by the candle high. What is that? 34.8. You're looking at about 500 points of risk there, something like that, if you get the sell signal. But that's if you were taking out like an outright futures position, or maybe if you took like the ETF, you could take like the ETF version of this. But that's what I'd be looking for. And if there is a short, all right, if the market pulls back as like it's trying to set up to do, I would be looking for exits in this area. I would not be overly expectant thinking, hey, we're going to make new lows. Although it's possible, it's very possible, I would not be very optimistic about it, right? I want to be conservative, like I said, in this environment. I'm always conservative, but particularly in this environment. All right, does that make sense? All right, so that's the US 30. Okay, hold on. Do they actually, yeah, they do teach. Elliott Wave was actually a big part of the CMT exams. They really emphasized that's, in fact, the getting my CMT is what helped me refine my Elliott Wave use, because before that, again, I was all about trying to figure out all the little details, and then like, oh, I have to look back, and now I have to redo this and redo that and relabel. Then one of the instructors there said, look, all you have to do is this. Oh, okay. And he really simplified it for me. So that's really how I've been using Elliott Wave ever since. Okay, so I'll talk about that Elliott Wave here in a moment. Let me just jump through. I have a couple more questions here. Let me just see if I could jump through a few of these. Again, if I miss your question, I apologize. All right, but I'm running. I'm I got to wrap this thing up here in a moment. So hold on, Netflix. All right, he's asking about a long in Netflix, NFLX. No way, man. No way. Long in Netflix? Taking a long. No way. All right. So, and the reason why I emphasize that so much is, for one, the NASDAQ, S&P, they look horrible. Okay. They're in a place to go short. And just like Netflix is, again, one of the FANG stocks. Okay. Netflix is the N in FANG. And you're at a resistance. You have an inside bar developing. I can understand why people would think that you're going to get a continuation pattern. It's possible to get a continuation pattern, but that's going to have to come from the stocks. It's going to have to come from the S&P. If that doesn't come from the S&P, this thing's going nowhere. So this is, if anything, this is a bad place for a long. All right. If anything, it'd be a very aggressive long if you take it, or maybe a day trade long, but the risk is so high here. If I'm thinking long on these, it's going to have to be here. Okay. Somewhere in this area, maybe slightly higher. Okay, something like that, but not a resistance area. No way, especially in a vulnerable market like we're seeing. No way. All right. So anyway, thank you for asking. Okay, so Peter, that basically everything that I just said applies to the S&P. Bart, I haven't seen you in a while. It's good to see you. So there's a stock here. That's the stock. Okay, hold on. So let me see if I can put that in here. These number stocks. Is this what you're talking about? This must be what you're talking about right here. Okay, it's in Hong Kong. It's a Hong Kong stock. So these, like right here, I'm not familiar with the stock, but right off the bat, what I can tell you is the recent structure. It looks very similar to the NASDAQ and S&P. I mean, it looks very similar. A lot of these times, these stocks follow the U.S. indices, right? You're at an old support, new resistance. So if anything, I would be thinking short or exiting a long, if anything. No new longs here. No new longs. All right. The sell signal may show up at the break of the low of this candle, which is what, 232. And these are Hong Kong dollars, by the way. All right. And this is likely to turn into a lower high. Now, again, I could be wrong, but the stock market, the S&P, will give you the answer. If the S&P continues to rally, then this thing is likely to start pushing higher. But you have so much resistance ahead of you. Look at this. You have resistance there. You have resistance here. So these are not places for longs. If anything, if you want to look for a long, look for the higher low or the double bottom. Okay. The bigger picture, of course, you can argue that they have some bullish structure on the bigger picture, but don't lose sight of that recent structure as well. Often it's confusing. There's a lot of conflict with the bigger picture. You may have like a long-term trend, bullish, but then the short-term trend is bearish. And then you're at a long-term support. What do you do there? Do you buy it there? It's part of the long-term trend. How you answer that question is it's going to have to do with your outlook, your strategy. Like, are you an investor or are you a trader? That's going to affect how you treat that situation. right? As an investor, if you're at a long-term support, that's a place to be going long. If you're a trader, though, it's going to be different, right? You're going to have different expectations there. Maybe it's a long there, but the long, that support may break, okay? And as a trader, you need to take that loss. As an investor, you're sizing yourself appropriately. So if it breaks that support, that's okay, because you're going to buy more. That's a different mindset. Does that make sense? Okay, I'm not going to get into all that right now. Anyway, thanks for asking, Bart. All right, forget Litecoin. Litecoin weekly is okay. Oh, Mr. the one and only. I guess that's sort of like Mr. Wonderful, right? Except you got the one and only. That's cool. I like Mr. Wonderful. USD. So he wants to see the dollar, right? So the dollar index. I showed this briefly before. Can I get the dollar index here? Hold on a second. Dollar index, please. All right. So like I said before, bullish. No question, bullish. Consolidation right now. So what does this mean anyway? Why is this important for trades? Well, for Forex pairs, for one, you're facing a strong dollar. So euro is going to be weak against this, pound, you know, the whole story. So we have the higher low in place. The dollar is trying to come off of that. I would anticipate that a higher high is likely to follow. I am more confident about this because the bond market's pushing lows. Okay, and that's a reflection of rising rates, which can only strengthen the dollar. Right? Does that make sense? So dollar strong. I'm still dollar strong. It's bad for gold. It's going to be bad for oil. All those things. You go, how could it be? They're rallying and blah, 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 blah. That's temporary because of geopolitical pressure. Does that make sense? So the dollar is still the world reserve currency, and the dollar will put pressure on everything. So, all right. So gold. He wants to see gold. So same story, right? Right. Gold against the dollar. People are going to make that mistake and say, oh, gold is a long here. Well, for the short term, gold might be a long. Gold went ridiculous, right? Gold got ridiculous because of geopolitical. And I was warning people, if you had bought some gold, take some money. Here's why. Gold, as you can see, look where gold went on the weekly. It went all the way up to this high. What is that high? That's you want to talk about Elliott wave. That's the wave 3 high. Okay, going all the way back to like what, August of 2020 or whatever that was, something like that, or August, yeah, 2020. We went right back up to that level and failed dramatically. So that tells me one thing: we're still in wave 4. Okay, that's what that tells me. And wave 4 means we're in a consolidation, which means that I would not be expecting new highs in gold, especially with that dollar looking the way it looks. So if you're going to buy gold, you're going to have to be very quick with it, very conservative, or wait for better levels. That's how I would trade gold. This is a tough spot for it. Although it is a support, you're still fighting a strong dollar. Okay, something to keep in mind. All right, I had a question about Elliott wave here. How much? I got to wrap this up here in just a couple more minutes. All right, so I'm not going to take any more questions. Okay, can you help me understand ZN1? Okay, yeah. I talked a lot about that. How can the dollar be strong when they just keep printing? They're not. No, they're not printing trillions more. At least not what the bond market says. Okay, they were printing, but Powell is raising rates now. So that's the opposite of printing. So I don't know who's printing, but the U.S. is not. At least not right now. Otherwise, the dollar wouldn't look that way, and the bond market wouldn't look the way it looks if we were in stimulus mode. We're no longer in stimulus mode. Chairman Powell raised rates. So that's why, okay? Check the settings on YT video and see the playback quality. It should be 720p or better. Lower than that, video may look fuzzy. Oh, okay, I guess he's helping people out here. Everyone else's currency is going tubes faster. That's why there are US dollars. Well, also, the US dollar, you can think of it as a safety play, but look at the bond market, okay? And Powell is raising rates. So we could sit here and argue about why, but as long as we're in a rising rate environment and bonds look the way they do, I don't care why the dollar is going higher. It's going higher, and that's it, right? So, and I know the kind of effect that has. So that's the context of the environment that I consider before any type of trade that I make. I have to keep that in mind in the background. Okay, now, so Alex is talking about a leg coming from 69K. All right, so let's go back to Bitcoin real quick. I want to answer that Elliott wave question. Again, Elliott wave can be very confusing. The best thing to do is simplify it. So let's go to that weekly. He's talking about, you know, the A wave, right? I guess from 69K, you're calling this the A wave. Well, let's take a look here. Actually, I considered this a wave 4 from a long time ago. I considered, even with the new highs, this was a wave 4. So we're still in that wave 4. Now, in the wave 4, we're going to look at corrective waves. Typically, corrective waves are 3-legged structures. They could be 5. A waves typically are 5 waves. So you can argue that this is an A wave, right? Now you're saying a B wave. What were you saying here? Let's see. This is still being an A leg. All right. And B is going to go somewhere to 55K. Well, so 55K, it's possible. It's possible, but it's hard to say. This could be, B may not go much back beyond 45. It may just make a failed high at 45. It's possible. And then the next C wave, if we get a 3-legged corrective type of move, right? A being leg 1, leg 2 would be B, leg 3 would be C. It's possible to see that extreme C leg that can take it, but you can't think in absolutes like that. All right. It's not so until the market makes it so. So I wouldn't, a C leg can also unfold in 3 legs. It's possible to get like a 5-3-3 or whatever. You know, they have the patterns 3-3-5, 5-3-5. There's no way to know if you're going to get a 5-3-5 type of pattern. So I wouldn't sit there and say, well, we're going to get a C wave and it's going to take us to 15K. You can't make that type of prediction. While it's a possibility, I would not put any weight on that because things can change. And if you sit there and think in absolutes, you're going to take positions that you really shouldn't be taking. All right. And taking risks that you don't recognize. All right. So let me see. Do you have a live stream on a regular basis? Yeah. So Moon, I do every Monday. Why not? Yeah. Well, yeah, Moon, I'm okay. Could you check BIS 100? All right. Every Monday. Okay. Thanks, Mr. Plow. Okay, cool. All right. So you guys, I got to wrap this up here. Look, yeah, I was talking about the support area. Oh, okay. Okay. Sorry. If I works, I'm just reading this text here. If I can work you some more HSI, okay. I gotta wrap this up. So Hershey, you want to see Hershey? All right. You know, I like the chocolate. So let's see. This is a nice looking chart, Bill. Certainly higher lows. Well, you know, a chocolate stock, I mean, chocolate or whatever they, you know, what they do. They always do well because when you're depressed, you eat chocolate. I know I eat lots of chocolate. When you're doing well, you still eat more chocolate, right? So plus they have amusement parks and stuff. So here's the thing. Definitely a strong chart, higher lows, higher highs, all over the place. Now, it is a stock, though. I don't know what their payout situation is, you know, how they share their profits. So that could play into this. The structure, like this is not a place to be going long. So you certainly want to be looking at support levels, right? You're near a resistance, possible lower high. This one may not be, this is probably not a growth stock, okay? This is not like a NASDAQ stock. This is a value stock. So it's more of a conservative play. Something like this may be good at a support level, like right around there. I mean, look where it's coming off of not too long ago. What's the low here? 193 is the low. So those 190s, right now it's at 208. So any test of anything below 200 might be a good long, either swing trade, possibly, I mean investment. Any extreme sell-off on something like this, maybe they miss a report or something else. But like I said, this is one of those, you know, they may get affected by the price of sugar because they use a lot of sugar, obviously. I know for a fact because I consume most of it. But you're looking at, you know, these would be your higher probability levels. Something like this, I certainly wouldn't be chasing it up here. But it's clearly a nice looking stock. I mean, no problems here, right? Higher lows, higher highs. It's not a garbage altcoin, and it's probably going to have a tendency to not be as correlated as the S&P. I have to look that up because, you know, you can find that information somewhere, the correlation to the S&P, but that could be a useful piece of information, all right? Because if S&P gets hammered, you know, pretty much everything is going to feel some pain, but some things are going to feel less pain than others. This may be one of those. So watch for those levels, right? Those would be the levels to go along. I wouldn't short something like this. There's no point, right? I wouldn't even think about shorting something like this. All right, you guys. So I'm going to wrap this up now. You know, I want to thank you all. I missed some of your questions, and I apologize for that. I just have so many. I can't answer all these questions. I have to go. But I want to thank you all very, very much for taking the time with me here today. Hey, look, a big picture of me. I want to thank you all for taking the time with me here today. Here, let me move my microphone. There we go. I want to thank you all again. Great questions. I stream every Monday now, multiple locations. Now that I'm in the year 2022 with technology. So check me out next Monday. You can find me, wherever and all that other stuff. So again, if I missed your question, I apologize. You can reach out to me. It's hard for me to answer a lot of stuff. Check out my analysis on TradingView. I write something there every Sunday. I would like to try to get more analysis out if I could, but again, I have a million things going on, so it's hard for me. But I would like to do that, like cover some more altcoins and maybe some other things that people would be interested in. Anyway, okay, so look out for something like that. Otherwise, wherever you are in the world, thank you very much. Enjoy the rest of your day, the rest of your evening, and thank you so much for watching.